Today, I'm going to be showing you how I caught this trade on EURUSD last week, so let's get right into it. Starting off always with the economic calendar, we can see that the big rocks, as I like to call them, of the week was the Tuesday CPI. So there'd be no trading on Monday. We'd wait for Tuesday to cause manipulation on the weekly range, and then we look to start attacking clear-sided order flow at the end of the week. Moving on to DXY, we can see that we had this spike above these equal highs into this gap here. And from there, we just had distribution slightly below this low, sweeping the liquidity here and then into this discount order block. And then ever since there, once we've seen price on the current week that we're looking at, as this is the Monday and this is Tuesday, CPI traded above this order block and then started using it as support on the Wednesday, and then the Thursday using this old volume imbalance as support as well. And then we just continued rallying higher. So this was our drawn liquidity and the midpoint of this gap. So if the dollar index is clearly one-sided and the drawn liquidity is higher, then we can look for opposing Forex major pairs or assets in general to be going lower. So then moving on to the Euro USD, we can see that where we had that run above the April high on DXY, we did not see that met with Euro USD. That is an SMT with the previous week's high. And then as we also created this new high, we had an SMT with the previous week's high with GBP as well. And this all occurred while we did sweep this buy side liquidity. And then we can see the same as dollar index. Here is our Monday, here is our Tuesday. They just pierced above this high, and as we traded below these lows here, and then especially once we got below this inversion fair value gap and below this order block and started using it as support, this is where we've seen major distribution come in. And as on the United States dollar, we were looking for this as a high, and then the fair value gap to the left of it. We are looking on Euro USD for this to be our target as a low, and this left fair value gap as our further draw. So now let's just open up Euro USD a little bit more and get some further details while still having the dollar, the daily chart here on the left and the 4-hour chart here on the right. We can see that once we had that sweep and we had all these SMTs, which is the sweep is pairing of orders to go short, and then the SMT is the cracking correlation telling us that smart money is looking to distribute their orders and send this price lower. We can see here that we have our weekly open marked up, and we also have our new week open gap in green. So we opened with this gap lower, we traded back through it quite quickly, created this SMT as we swept this little short-term high, and then we traded below the new week opening gap and below the weekly open, and we started just using it as support on price. This was our first sign of a change in state delivery here on the 4-hour on the euro, and we can see here that we've got all this liquidity that we want to be targeting while we're expecting the US dollar to go higher. Now we have the previous week's low, which is also the May low, and then we have this low over here, which is also April low. So these are not only just previous week swing lows, they are also monthly swing lows. So we add time-based mechanisms to the swing lows. Is how we match time and price. And then you can see that we can also draw a trend line across here for this 1, 2, and 3 low, which retail would be looking at as a trend line, of course, okay, with their retail patterns. So we look at this as if there's a lot of liquidity here in the form of a trend line, and we look for this to be attacked. So after CPI done its damage, we've changed the state delivery, and now we've caused this displacement through this daily fair value gap here. We have a few things. We have one, this order block, this daily fair value gap, and this 4-hour fair value gap, all as, call them like resistance blockades, okay? Like blockades in the way of pushing us higher. These are very strong and should keep price lower and lower, okay? If we are truly to see these lows be met, we do not want to see these blockades be pushed through, otherwise this would cause invalidation. Now, if we just jump onto the 1 hour of the Euro USD and we refine this even more into our actual profile for entry, we can see that, of course, these are our key support levels. These are our resistance levels, okay? We had that 4-hour fair value gap here, which is now broken into 2 1-hour fair value gaps. We have that daily order block, which, as we can see here, is also a mitigation block, because we have high, low, lower high, and then we have this break through this low. So we have a lot of areas of support above, which we do not want to see broken, as I mentioned. We have, if we zoom in here, the previous day's low here. So at London session, we created this low and then we started retracing. We've just been consolidating in this range ever since. We have the new day open up here, and then we have the midnight open right here, okay, on this candle. From here, we have a protraction during the London kill zone above the Asia high, so the previous session's high, and this is while we are inside of this blockade areas, okay, of key level support or resistance in this case. And quite simply, this is where I sold short. I did not wait for this sweep, but I just sold short inside of these higher time frame key levels. Then we have this total soup, and then we started trading lower. As we trade below this midnight open, that is a shift in the change of state delivery from bullish to bearish on an intraday basis. And then we can just see that this order block is holding support on price. This propulsion block ends up holding support on price here. And then we just keep traveling lower and lower and lower until we eventually reach the previous day's low, the previous week's low, and then where I sold off the majority of my position was the Thursday, 30th of April low, and then I held the remainder of my position to the midpoint of this daily discount imbalance. So here is the actual result of the trade. Once it reached terminus, we can see that with everything aligned from economic calendar, post CPI release to the dollar index being clearly one-sided higher, and time and price being perfectly met in a structured market maker sell model with clear trendline liquidity and previous month's low and higher time frame inefficiencies to draw for. This was not a high resistance liquidity run, and we can just see from entry here inside this daily fair value gap how quickly we ran off, just every candle being a down close candle on the 4-hour. So this was a beautiful low resistance liquidity run, and I am very proud of catching this trade and happy to share it with you guys. So I hope you found value in this, and I'll speak to you in the next one. Ciao.